Gay, please can you explain why the board implemented a new dividend strategy at JPMorgan Global Growth Income?
Yes, well, when I joined the board, we were subscale, under 200 million market cap. We were trading at quite a significant discount, around between 14 and 16%, and we were buying back shares. So we were essentially getting smaller, and we just were not in the kind of appealing side of the investment trust world. So we worked with the board, the chairman in particular drove this idea with our brokers and with JPMorgan, the broader team there, to work out what could we do to really grow the trust. And we decided that we would essentially separate out the investment policy from the distribution policy. And we kept the same investment manager process, but what we decided to do was to increase the distribution so that we became an income investment trust rather than a growth investment trust. So essentially we started delivering total return rather than capital growth. That meant that we moved sectors, so we changed from being in the global growth sector to being the global equity income sector. We changed names, so we went from JPMorgan Overseas to JPMorgan Global Growth and Income. We completely rethought what is our offering to the market. Why should people buy our trust rather than any other income trust? Because we could see that everyone was had the appeal of an income trust, but why should they buy ours rather than others? So we thought very much about what is our kind of messaging, what do we need to get out there? And once we agreed that, we got out there and we went on roadshows, we did digital marketing campaigns, advertising campaigns, PR, and that really made a difference to our shareholder base.
I'm going to say, what impact has it had for your shareholders, this change?
Well, multiple impact. So first of all, from the discount of around 15.5% at that time, we are now trading at a premium. We went to a relatively attractive premium. We're now just on a premium. And that has a lot of benefits to an investment trust because it means that we can start issuing shares rather than buying them back. So we're growing in that way. But I think the thing that we were most excited about is that we had a lot of marginal shareholders before we did this who were really there in order to try and ride out the discount. They weren't really invested in JPMorgan Overseas as it was then for the sort of long-term investment prospects. They were just trying to ride out, a short term. So they were a bit like a hedge fund, although they weren't all hedge funds. And this change meant that we were much more appealing to the wealth managers whose clients tend to be there for a much longer term time period, who are buying a trust for a part it might play in a broader portfolio, and who are very definitely kind of long-term supportive shareholders. So that to us was I think the most exciting rationale and result from this, and we're really pleased with our shareholder base, although we can see it developing more and we need to get out there and continue to tell the story.
Yes, and a huge impact on that discount, bringing it to a premium.
Yeah.
I'm sure your shareholders, thank you for that.
Happy.
Yes.